This will start our first category because we're recording now. So we'll start our first conversation here for the channel. So Arnie, you just said your portfolio, you're very concentrated. You have three positions: Apple 40%, Palantir 40%, and 20% AMD, right?
Yeah.
Yeah. So all have free cash flow. All are very resilient companies. Are not begging for capital. Don't need capital to operate. And this was a conversation we started before shooting this morning on Twitter. I was asking you guys about return on invested capital and free cash flow. I saw some different posts from John Mertanti, who's an analyst at Motley Fool. He talked about the value of ROIC and free cash flows and investing in businesses that you can endure these times with, like the three companies you stated, and also knowing the business and how it generates that cash, and that free cash flow is more important than earnings. That's what you want to look for. And he referenced a book by Michael Mauboussin and Al Rappaport called Expectations Investing. It's really good. I'm like 3/4 the way done, and it's phenomenal. And it got me really thinking about my investing thesis differently. Didn't change anything about Palantir or anything, but in general, for my portfolio, I have probably 50 companies now. Was like 75 before. I have 50 companies, but really the top 10 make up probably 65-70% of my portfolio. And there were things ranging from Twilio, and I'm looking here at my, actually, you know what? I'll just share my screen so you can actually see what I'm working on. This is a sheet that I'm starting to make a scorecard that's based off of sustainability and return on invested capital and free cash flow, and what can those companies do, really making sure, will they be around for 10 to 20 years from now? And I don't think that was something that I was really grading very highly of or emphasizing when I was buying stocks, because you don't have to have a whole bunch of big winners. You only need like one or two to really outperform the market. And that's really my only goal, was to outperform the market. I don't know about you guys. Kris, how would you state your portfolio and your goals?
No, I would say the same exact thing. I'm loving this portfolio. As I'm looking through it, one area that I would say that I guess it's not necessarily in your calculation that I would maybe consider putting in would be, where is the industry going? Like if you have if you have the pie essentially growing, regardless whether or not you're the leader in that company, in that growing pie, you're going to do very well. So as an example, we all knew 10 years ago, cell phones were going to be a really big deal, right? Now, Apple was able to capitalize on it, but basically it's an industry that's growing. So I would say in one column, I would just put, what industry are they in? And is it an industry that's going to be growing at a fast pace for the next, 10, 15 years? Because I would
call it a secular trend.
Yes, secular trends, exactly.
Yeah, so that brings a good point of, when I look at these, there's some really good businesses, but one thing I'm starting to factor in now, and I used to have a scorecard that I called World Changers. Is the company a world changer? Do I think that they will make a major impact that the world needs? And when I start thinking about that, obviously Palantir checks that box, but also NVIDIA checks that box from an AI and a compute perspective. Like, if we ask ourselves, will data go away? No, data is only going to grow exponentially. We know that. We also know you need compute to generate all that data to deliver real-time analytics and real-time results on that data. And so we're going to continue to up our compute. You have to keep up with what the demand is for enterprise, for consumers, et cetera, right? We're at 5G now. We'll have faster cell phone internet in the future. So one of the safer bets in my mind is just like, how can you deny, if you have a pretty well-balanced portfolio on semiconductors and compute, I don't know how you could lose if you're willing to hold 20 to 30 years for those couple companies. Like we talked about AMD, I have like $5,000 of AMD. You look at NVIDIA, you look at Microsoft started to create their own chips, and so is Amazon. I don't have Amazon as a holding, but I'm definitely looking at that. But to your point, Kris, what I was thinking about was like, what are things that we can bet on that we know those secular trends are going to be there? And when I think of it, AI and compute are just two of the biggest that I don't see how they're not a secular trend. What are your thoughts, Arnie?
And right now they cost like a Coca-Cola.
What'd you say?
And right now, many of them cost like Coca-Cola.
Yes.
And that's the absurdity, because right now, all the people went so conservative that the defensive sectors became to a high price that right now is extremely speculative. Because if you buy at 25 or 30p a company that doesn't grow, basically your expectations of returns are 0.3%, but you're exposed to a multiple contraction if something goes wrong. While on the other hand, with companies like, I speak of Palantir and AMD because I'm the one I'm more focused on. With Palantir, you have the same price to cash flow of Coca-Cola with clearly a different growth prospects, a clearly different margins going forward. True, there is the dilution effect that must be considered, but if the free cash flow growth is around 30%, the dilution stands at 5-10%, it means that on a free cash flow per share basis, you are gaining in intrinsic value some 20%. So paying a 25-30 price to cash flow for that with a long way is not actually expensive, contrary to what many people say. And if you look at the absurdity, right now, for instance, AMD trades at a forward PE, price to cash flow of 14-15 net of cash, because they did the M&A with Xilinx, and probably many people still look at the trading PE, which is completely misleading because both the company grew a lot, meanwhile, more than 50%, and having changed the number of shares, that for past PE is not indicative. And with the acquisition, AMD got more net income, more cash, and was an accretive acquisition. So the real PE of AMD right now is almost half of that of Coca-Cola. And clearly the growth prospects are very, very different. And they're backing shares aggressively at a dividend yield of 7%, like a buyback yield of 7%, while Coca-Cola gives a dividend of 30%.
Yeah, one thing that I hope people take into consideration, that if a company is paying a dividend, there's a reason why. It's almost like they're paying you to buy the stock, right? That's one of the reasons why people buy into it, because there is a dividend out there, as opposed to a business who's like, look, we have a better use for that capital. We can reinvest it and make way more money exponentially. If Coca-Cola has enough money to give a dividend versus reinvesting in its own business, you know that the business has less growth prospects than just returning that capital, right? So I would say, looking at companies like AMD, who are more confident in their own business, as opposed to trying to issue a dividend just to have these, longer term fixed income investors, it doesn't make sense. For me right now, I think AMD, that Xilinx, as I'm piecing through the Xilinx deal, I'm looking at what benefit AMD got, and it's huge because Xilinx brought a lot of missing pieces to the AMD pie. AMD right now, I think, has the potential to overtake both NVIDIA and Intel, because just the way that Lisa Su is kind of positioned for it. So right now, they're literally they've created a company that's going after all segments of the what do you call it, compute process. So Xilinx was primarily in FPGAs, right? So purpose built.
Can you define that for people so that way they understand what an FPGA is?
Right. So basically, it's almost like you're building a chip focused for a specific use case, right? So there's something called system on a chip versus FPGA. So basic FPGA, you're trying to build out build out for specific use cases, right?
Yep.
And you're creating things on a much smaller scale with smaller batches, but they're much faster, and there's all sorts of things that could be beneficial. So you're not building just one chip, you're mass manufacturing it, and then the use cases, then
Well,
you
they're
try to figure out.
reprogrammable.
Right, they're reprogrammable, right? Yeah.
Yeah,
So
that's
yeah,
what
go ahead.
interests me about it was it's artificial intelligence on a chip that's reprogrammable for specific purposes. And Xilinx was the leader in this space. That's all they did, but they did it well. And then AMD, as Arnie said, or I think maybe Kris, you said, was so brilliantly got it past antitrust and got that approved, and they got that acquisition. So now they can start putting that in cell phones and other wireless devices. It opens up a lot of new sectors.